Hi, welcome to the Market Alert for Tuesday, the 1st of September 2015. Starting off in the 5-minute chart, the pre-market session became fairly quiet yesterday, 5 a.m. Not 5 a.m., it was 6:30 yesterday morning. We had the long trade just after finishing recording, and then the market became a bit quiet and a bit choppy. This trade here down 20 points and not going any further was a bit of a clue there for these two, where the market didn't move lower and the market closed back above the 16,500 and moved up 50 points to 16,551, and that was really it. And then it tried to move down again and then came back, and then eventually it did go. So it became fairly quiet as the European markets were closed and only the US open at this time. And of course, as I mentioned yesterday, the market could go quiet once Shanghai had closed, which it did. So in the afternoon session, which is from here, in fact, what I will do is just add back in the primary trade times and keep the signals on outside of the trade times through the options inside of here. You've got the PTP, and we can just remove the hide PTIs outside of the primary times. They're the only ones that we've got on at the moment outside of the primary times. And here you can see that we've got the market coming down at 10 to 4 in the afternoon. That was about the only signal for yesterday, and then the market coming back up, and then again it was bank holiday, nowhere else open apart from the US, and you can see very tiny narrow range there for the market. The overnight though, different picture. Again, we've got the market trading sharply lower. It's traded from the highs up here all the way down to the 16,250, 251 points down again on the overnight market, and the market just finding some support. Amazing really, we're getting the big moves now on the overnight and not necessarily in the pre-market session. However, that said, of course, today everything reverts back to normal. The European markets will be open in a couple of hours time as well, so we'll see a lot more activity there. So again, bouncing back about 70 points so far this morning, and now just stuck in a sideways range waiting for the European markets to open. In the daily chart, very interesting picture starting to show here. The market's rounded over. We could see an acceleration to the downside, so what I'm going to do is just to mark up a few fibs. We're already through the 76 and 62% of this low to this high. So what I'm going to do is just to pick the right tool first, is to go from here up to the recent high, and this is where I would expect the market to move down to initially. Also, the low of this bar is important, this professional buying bar. Closed below this 16,245. We've seen the market find support at this level so far, but a close below this will see the market move lower as well, and if it does, then it will accelerate down to these levels here as well of 16,000, and then of course the 15,843 as well. So in order to keep the illusion alive that the Ponzi scheme isn't coming to an end, we need to see the market turn around and move back to the upside, and failure to do this, we'll see the market head south and retest those lows over the next few days or the coming weeks as well, now that we're actually in September, which is 2007, 2008 was the month when the markets moved sharply lower, also in 2000 as well. So September is a crucial month for the markets. And just on the news front, what have we got? 3 p.m. we've only got the ISM manufacturing PMI. This is forecast to come out just slightly lower, again indicating there's no reason to increase interest rates in the US, but you never know what they're going to do, and if they do this, take this unusual step, then you can expect a very big sell-off in the bond market, and they know this as well, but whether they're brave enough to take that chance, who knows. And in the implied volatility, quick look at Shanghai before we move on. We've got that market also rounding off as well, again, which is going to play a part and add to any downside momentum if this starts to go. And in the implied volatility, 22.42, up slightly from yesterday's 21 point whatever it was, I can't recall now. So again, but sideways for this. Also notice that crude oil has moved up sharply over the last few days, and it's a case now of will it continue, or is it going to reverse and head back down to those lows? Because certainly $32 is on the card as we go through the next few months in the sort of autumn time. Right, that's it for this morning. I will see you in tomorrow's edition. Have a good day, and as ever, thank you for your support, and also for watching. See you in the next one.